Hi everybody, we've done it for fiscal policy and now we're going to do it for monetary policy, understanding major themes with monetary policy in the UK economy. The reason why this is so important, we know monetary policy is a major hot topic area for paper 2, but often when these questions come up, they are linked to major themes in the UK. So knowing those themes well so that you can have data in those essays, but also so you can pick the most relevant arguments is absolutely crucial. We're going to cover the major themes in this video. Just make sure though, guys, that you've watched my fiscal policy themes video, the one I uploaded last. Watch that first and then come to this one. The two very much go hand in hand. So let's get into it. What are the major themes with monetary policy in the UK? Well, the first theme is the huge expansionary monetary policy that we used during COVID times. We're looking at 2020 and 2021. Now, interest rates in the UK were slashed all the way down to 0.1%. That is the lowest rate in the history of the Bank of England. Bear in mind, the Bank of England have existed since the 1600s. We've never seen an interest rate as low as 0.1% before. Again, we know how deep the COVID economic crisis was, our worst recession in 300 years. Not surprising then that expansionary monetary policy had to be used. Interest rates were cut to so low. But also bear in mind that interest rates prior to COVID were 0.75%, still very, very low. So there wasn't much space to cut interest rates. We cut as much as we could. But because we couldn't cut further, we needed further stimulus measures, further expansionary monetary policy. The Bank of England were forced to use heavy quantitative easing. £450 billion worth of QE money was pumped into the UK economy, and this is just extraordinary when you think about it. That is 20% of our GDP, money pumped into our economy. Unbelievable. And that is out of a total amount of QE of 895 billion. So you can see from our total, our COVID QE is half of the total. And this is the third time we've used quantitative easing since it started back in 2009, 2010. But half of the total was COVID related. So just to give you an idea of the scale of how extraordinary this expansionary monetary policy was, how crazy this expansionary monetary policy was, you can see from this data here. And why? Well, the reason why we did it is very much the same reasons that you learn in the classroom, right? To stimulate aggregate demand, to boost AD, to try and help an economy out of a deep recession, to raise economic growth, short-term growth that is, to reduce cyclical unemployment, and to raise inflation. We know in a deep recession, all these macro objectives take a hammering. So there is a need then for expansionary monetary policy to try and recover some of these macro objectives. And again, at the heart of our COVID economic crisis, all three of these did take a bit of a hammering and needed support. Hence, expansionary monetary policy was used to this huge scale. But the concern now we are seeing, because of all of these policies, we are seeing higher rates of inflation. The irony here is quite interesting, isn't it? The Monetary Policy Committee, those in charge of setting monetary policy in the UK, have a goal of inflation targeting, hitting our 2% inflation target, right? Well, now we are miles above, and you could argue a lot of it is their fault because of how expansionary these policies were, especially the enormous quantitative easing, this huge increase in the money supply. You could argue that's a big reason why inflation is miles above target. The CPI inflation rate right now is 9%. Our target is 2%. And we're expecting higher rates than that going forward. Certainly, these policies have had a part to play in that, which is very ironic, given that it is the Bank of England's job to control inflation and hit the 2% inflation target. So certainly, they've had a part to play in that, that is for sure. And as a result of that, we are now in the contractionary monetary policy side. Let's talk about that, shall we? Well, now to deal with very higher than target rates of inflation, the Bank of England are basically forced to use contractionary monetary policy. Raising interest rates is the dominant way they're doing that. Interest rates, as we talk right now, are 1% in the UK. That's a figure we're expecting to see go up and up and up as the months continue. You can see that they were 0.1% during the worst of the COVID crisis. In truth, they were 0.1% all the way up until December 2021. So in a short space of time, interest rates have gone up a lot to 1%. They're going to continue rising. We're also seeing quantitative tightening. Gently, this is just the reverse of quantitative easing. So instead of increasing the money supply, trying to reduce the money supply now. So this is all contractionary monetary policy, very much for the goal of trying to reduce inflation. Go back to the irony. The Bank of England, through their policies, have created lots of inflation. Even greater irony, you'll see. Countries that didn't use quantitative easing in the developed world haven't seen the same rampant high rates of inflation that we are seeing. Yet because of our huge expansionary monetary policies, us, the US and the Eurozone with big QE are seeing very high rates of inflation. So now we're having to reverse it all, contractionary monetary policy to bring it down. But to evaluate, are these policies going to work? Raising interest rates, quantitative tightening? No. We're still going to see higher than target rates of inflation for a long time. Because we know a lot of the drivers of high inflation are actually cost push factors. Yes, there is demand pull inflation. There's a lot of cost push inflation though too. So raising interest rates is not going to reduce oil prices, is it? It's not going to reduce energy prices and food prices. So those drivers are still going to be there and inflation is still going to be above the target for a long time. But the Bank of England have to be seen to be doing something. If their job is to control inflation, hit the 2% rate, they've got to be seen to be trying at least. So contractionary monetary policy for that goal, but we can evaluate accordingly. But also raising rates to reduce household debt. Too much household debt, private debt is dangerous in case people lose their jobs, in case incomes fall, they could go bankrupt in that situation. But also to promote sustainable growth. We don't want an economy that's reliant on credit, on debt-fueled consumption and investment constantly for our higher rates of economic growth. But also to encourage saving. Yeah, higher interest rates encourage that, and that is important as well in an economy. The major concerns of doing this, going hard with contractionary monetary policy and going even harder we're likely to see in the future, is that it could shock the economy back into a recession again. These are contractionary demand side policies. In theory, they're going to reduce aggregate demand and take us back into a deep recession, a double dip recession. Many forecasters are saying that's likely to happen. In fact, the Bank of England themselves are saying that these policies could well trigger another recession in the UK with lower growth and higher unemployment. So yes, very much the biggest concern. But also, what about those with high debts? Households, individuals with high levels of personal debt, businesses with high levels of business debt, with now higher rates. If they can't afford to repay these debts with higher interest rates, what happens to them? Do individuals go bankrupt and their living standards fall off a cliff edge? Do businesses now struggle to repay these debts and therefore go bankrupt? In which case, risking rising unemployment in the economy. Genuine concerns, and also higher interest rates discourage investment, right? And can really hit short-term and long-term growth in the UK economy. So really the timing of this is not great. Bear in mind, we are in a cost of living crisis at the moment. So raising interest rates is just hurting more and more people who now need to pay more to service debts. The timing is bad. The risk of a recession is very, very strong. But the Bank of England have to do it to be seen to be doing something about very high rates of inflation. You could argue that they have created partly as well. So that's where we are, guys, with monetary policy. The expansionary side during COVID times, and very much now the contractionary side. We're going to be here for a while. But hopefully you've taken all of this in, you understand it well. Just make sure that when these monetary policy essays come in paper 2, you're going to smash them, you're going to write in context, pick the points that are most relevant, bring in some of these stats too to help you out, and you are going to look incredible to the examiner, and that's what your job is. So thank you so much for watching, guys. Another great power video here. Stay tuned for more. I'll see you all in the next video.